Today, I'm excited to introduce Rob Buka.
I wasn't always transparent. I'm embarrassed that I didn't do it earlier. 24 hours later on that Friday, I was down $100,000 in unrealized losses. That's 10 times worse than the largest drawdown I'd had ever. Because if any of us could take back our worst 5 trades, we'd have so much more money. So the real question isn't, can we make money trading? It's, can we keep ourselves from giving it back? I documented almost every single trade I took for a long, long time. And you can start to see characteristics. They start looking exactly the same.
Today, I'm excited to introduce Rob Buka, a seasoned trader, industry veteran, mentor, author. Rob has penned influential books, including The Adventures of a Currency Trader and The Currency Trader's Handbook. He's also the voice behind the Traders Podcast and the Trading Book Podcast. Today, we're going to jump into his background, his thoughts on transparency, as he's fairly recently new to Kinfo, and hopefully we'll dive into some charts at the end. But first of all, Rob, thank you so much for coming on. I've seen you everywhere. How are you?
I'm good. I kind of disappeared for a while. Kinfo was like the only way you could find me for a while. I don't sell anything anymore. I don't even host any podcasts anymore. I just kind of keep to myself, and I've really enjoyed, like, hey, can I get a link to your website? And I just send them the Kinfo. I don't like, you can just look at this. I don't.
No, but I absolutely love that about you. I was when I was doing the research and I was looking into this, because obviously you trade all sorts. You trade Forex, you've got a background in Forex, you've been options, small caps, large caps. And when I first Googled your name or searched your name on YouTube, I saw like YouTube videos from like 15 years ago. And I was like,
Oh yeah,
this
my
can't be
hair
the
is all
same guy.
different. I look like a completely different
Yeah,
person.
it's like, he's not a Forex trader, is he? He's an equities trader. Who's this guy talking about Forex? But it was you. I was like, oh, okay. But
Yeah.
I guess that leads us into the first question. You've been trading 20 plus years across Forex, options, large caps, small caps, written books, hosted 650 plus episodes of the Traders Podcast. But how did you get started in the whole game?
So I went to law school in 1995, finished in 1998. I didn't want to practice law. I practiced law for like 1/2 of 10 minutes. Like literally went upstairs, sat down at my desk. I was like, this is terrible. So I left, and that was in the middle of the dot-com boom. And I was so fat. I went to law school in the San Francisco Bay Area. And my summer job, I worked at Montgomery Securities when Netscape went public. And I just caught the bug. And so I started a company after law school. That company failed. The second company failed. And then my business partner fled the country. And I was like, you know what I'm going to do? I'm going to trade my way out of this financial mess. Like, like I can't even do that now. Like, it's like, if my back were against the wall, I wouldn't be able to do that now. It was just like worst possible. And I started trading currency because it offered like 500 to 1 leverage. And this guy named Ron Suber, you can look him up. He's on LinkedIn still. He was the head of correspondent clearing at Bear Stearns and in San Francisco. And I called him up because I had met him. And he said, whatever you do, don't trade Forex. Don't trade currencies. It's risky. It's a scam. It's like you could just, and all I did was like, I just heard none of his warnings. And that's all I heard was leverage. You could make a lot of money really fast and you can lose a lot of money really fast. It's like all I heard was none of the warnings and all of the potential. So I started trading currency in the year 2000. That's when I started way back.
Can I just ask you, what was your first business idea?
Oh yeah, I love this. I love this story. I'm so glad you asked this question. I actually was looking at this. There's the Wayback Machine on the internet where you can.
Yeah. Say the old internet.
Yeah, so what we did in the late 90s was in the early days before anybody knew any better, we set up these old dumpy broken down Windows 95 computers, and we set up macros, like literally like remembered keystrokes using programs, and we cycled through monster.com and the job websites, and every night we would download every resume posted to monster.com, like every single one of them. And it wasn't even against their terms of service. And then we would scrape job postings. And then we launched websites where for $5 or $6, you could send your resume automatically to a bunch of employers.
Wow.
And we were making like $70,000 a month,
Wow.
but we were spending $80,000 a month. Like, we were terrible business people. Like I was using, the old thing, like I was using a door as my desk, and we just we had our internet costs were so high back then. It was so expensive to have like high speed internet and whatever else. So we launched a bunch of those websites, and all of them made money and all of them failed because we spent all of the money. Like we were terrible business people.
But you often hear with investors that they'll say often don't invest in an entrepreneur on his first idea. It's better to try and let him fail a couple of times and get the second, get
Yes.
the third.
That's true in the investment world too. You see the guy that lost like $9 billion in the natural gas trade up in Canada, whatever the name of that firm was, A or whatever, that guy's managing money again. John Merriweather, after long-term capital management, they gave him money again. Like I think they almost think like, oh, he learned his lesson. Like
It's true.
he or she learned their lessons and they won't do this again. It's really weird.
It's true, and I mean, I think as long as you're courageous enough to enter the battlefield and take the mistakes and take the roller coaster, it's okay because you do learn. As long as you do learn. I mean, if you, it's like if you, it's like a hangover. If you're drinking too much and you're hungover, if you're 40 and you're still
Right.
having those crazy hangovers, then you're not learning. But it's okay to make the mistake one or two times and learn and improve.
It's funny you bring that up because today's the day after St. Patrick's Day, and
Yeah.
I don't ever drink, but there's an Irish bar downstairs, and me and my friends went down there. And after 11:14 p.m., I don't remember anything. I'm glad I got back up home. Like
But you drink occasionally, but not
every
often.
once in a while. Yeah.
No, but it's I used to do a lot more. I've stopped now because to run a business or to do any kind of anything worthwhile, it's better not to.
It is absolutely true. Yeah, 100%.
But yeah,
I was introducing everybody to each other in the bar, and they were like, "How do you know this guy?" I'm like, "I just dragged him across the bar. Like, I don't know this guy at all." Like, I was having a great time.
but it's good once in a while. But in terms of the $1 million question for me, because it seems that like I hear a lot of people saying, "Oh, forex is a scam. It's over leveraged. It's
Yeah.
it's X, Y, and Z. You should go into microcaps." And then people are saying, "Oh, microcaps are a scam. It's all market
Yeah.
makers manipulate the market." So you've been in the industry this long. What's the advantage and disadvantage of each?
Yeah, that's a really good, it's a great question. So I haven't traded any currencies for a long time, but so I got into it for the leverage, and it still has a lot of leverage. Um, so currencies were great back in the day where there was a lot of leverage. And I mean like the mid 2000s, it was great because there was a ton of leverage. And what I would do was, and this just sounds so stupid, and no one believed me. I even traveled the world. In 2009, I went to like 32 cities. But I would buy the pound yen, New Zealand yen, Aussie yen. I would buy those in one account and at Refco or FXCM. I loved Drew Niv from FXCM. He was so good to me. Um, and I would buy them there, and those were high interest bearing. And so every day that you hold those, you would get paid interest. And back then, the interest rate differential was 6% between 0% in Japan and 6% in the UK. But you got 1,000 to 1 leverage. So you could make 6,000% a year if you bought pound yen and just held it. But what I did was I went to CMS Forex and I said, if I open 1,000 accounts for you, because I had a podcast and whatever else, if I open 1,000 accounts for you, will you give me a no interest account? And I promise I'll margin call it. You can just B book it. And they were like, who, what? Who are you? What are you talking? So what I did was I would buy pound yen, Kiwi yen, Aussie yen, and then in CMS Forex, I would short it and I wouldn't be charged interest in that account.
Mm.
And so pound yen, New Zealand, all of them were just going straight up. All of them were going straight up because the interest rate differentials, and that's the only game in Forex is interest rate differentials. And so they would all go up. And so the accounts that were short those would margin call and they B booked it. So they just took all the money. They were just making my full account. And then I would just refund that account with the profits from the other one. And all I was making was interest. One account would margin call, and then I'd hold the other position for one more day and I'd get a little juice. I'd get it juiced up a bit. And I did that for 4 years. And at one point we were using spreadsheets and moving $6 million back and forth. And I wasn't even trading. There was no trading. I wasn't a trader. I was literally just moving money back and forth between accounts. That was the greatest trick I ever did. And only four other people, I probably spoke to 2,000 people, only four other people. Don Woolanen in Orange, Connecticut, he did it. He put his girls through college with it. And then like three other people. And everybody said, there's no way that's going to work. And I think that just about every other thing I've ever tried in the world of currency, with the exception of some bots, everything else just doesn't work because there's no edge. There's no way to trade the news. There's no way to anticipate. It's so difficult because there's only 28 major currency pairs, and you can't evaluate each country like you evaluate a company. There's no it's all interest rates, and it's all super long-term moves, and everything in the middle was just noise.
It sounds to me like you've got that kind of entrepreneurial, creative mindset where you're just looking for gaps in the market. Or I remember there's a trader I interviewed a while ago called David Hale. I'm not sure if you're familiar with David Hale. He's
It sounds familiar.
20+ year trader, and he would trade glitches in the market. So you'd look for a market inefficiency and then just capitalize on it.
Yeah. Back in the day, like in 2004, 2005, Refco Canada. I don't know where all these Forex firms came from back then, but it was the Wild West. And Refco Canada, the dealing desk, updated prices manually. Like they would manually approve each new quote. But when news came out, they were delayed by 10 seconds. And so you could actually just 10 seconds before them. It was so stupid. Some of those things were just glitches, like stupid things that shouldn't have worked. One time, my friend Nick Barker and I don't know where Nick is now, we built a bot that would constantly request to trade outside of the spread. So it would
Yeah.
try to buy at the bid and sell at the ask. And so we sent 100 orders every minute. And then we sent 1,000 orders every minute. And then we sent 2,000 orders every minute until we were sending like 10,000 orders a minute. And we were trading at Interbank FX. And we take $2,000 and run it to 30, run it to 30, run it to 50, run it to 60. And then one day we sent 20,000 orders a minute, and we shut the whole the whole thing went down.
I've heard this
Interbank
story.
was down for 2 days. And 2 years later, I went in and I became the chief market strategist, the TV guy for Interbank FX.
Oh, wow. Very nice.
Todd Crosland, bless his soul, he goes, "So what was your first experience with Interbank FX?" And I made the decision to go ahead and tell the whole management team this story. And they were like, "Yeah, we were down for 2 days. That was not." I'm like, "Well, but that's what I did. I would find these like inefficiencies or glitches or whatever." And that was great. And Todd Crosland of Interbank FX was one of the greatest entrepreneurs of all time. The other thing when we were there at Interbank FX, this is one of the best things I ever learned about retail traders. At Interbank FX, you could see if the book was 51% long the euro, for example. So you could see if retail traders were net long or net short euro, yen, or whatever. And what we found is that typically they were right at the close, at the New York close. If the book was long euros, they were right, actually. Over the next 24 hours, the euro would 90% of the time or more would end the next day higher. The problem for retail traders was they traded so big, they would stop out before they got the benefit of the move. And we tried to launch a fund. We tried to launch a fund that traders could invest in, and it would trade the book. And so instead of us trading the book, which would be, I think, a little bit problematic, we said, let's offer it as a product. Everybody thought retail traders were so bad that no one would do that. And it was like the most obvious, and I bet it's still true. I bet en masse, retail traders actually pick direction correctly.
Yeah.
But they trade so big they can't survive the move that goes against them.
Yeah, that makes a whole lot of sense because the retail traders are trying to turn a little bit amount of money into a big amount of money, and it means taking too much risk. But so your background is in marketing, or some of your background is in marketing and advertising. It's just because that's my background.
Yeah,
as an agent and creative, I did creative.
Yeah, yeah. I mean, my friend Boris Schlossberg, he's an FX trader. I don't know if you've ever talked to Boris, but he's in New York City. He's been a friend of mine since the very beginning of Forex. He and Kathy Lean built Daily FX, the first website, and Ashraf, Lottie, and Kathy, and we were friends from the very beginning. And Boris used to say, while I was studying the markets, you were studying marketing. And I said to Boris, I said, you know what? Expletive, expletive. I was doing both. I was doing both. And yeah, I mean, yeah, I spent a lot of time. I read Seth Godin's books.
Yeah.
I mean, some of those had a really big influence on me, a huge influence. And I did, yes. So I was building a business in the podcast and I did. I loved marketing. I did love it. I don't love it anymore, but I did a lot.
No, it's been my passion for I've done it for the last 10 plus years and all like in different places in the world as well. But going back to trading, so you were originally initially in FX and how did you get into small caps, large caps, options, I believe you were do?
Yeah, so in 2011 or 2012, whatever the Dodd-Frank legislation, when that came through, it became illegal to hold for a US citizen to hold an account overseas. So all of these foreign brokers that had 1,000 to 1, 500 to 1 leverage, they all disappeared. Like
Mm,
we all got our accounts closed and there was no more edge because leverage was the edge. Leverage plus interest rates was the edge. You could trade interest rate differentials all day long, but you had to do it with leverage because 6% a year isn't appealing and you could no longer hedge it because you couldn't put the money overseas. So I went through like the valley of the shadow of death. Like there was a 3 or 4 year period where I couldn't figure out what to trade or how to do it. And I went to
wow.
options. I drove out here to Austin, Texas and interviewed John Carter after he took his first million. He made $1 million in a day trading Tesla. And I came out and none of it made any sense. I couldn't tell from a call from a hole in the ground.
Yeah,
And then I got into trading some options. I got into trading like buying the top stock of the day, like the runner.
yeah,
I was never good at buying stocks. I'm still not good at buying stocks. I'm terrible at buying stocks. And then in 2020 and 21, I had sold the podcast and the YouTube channel, and I was doing some consulting and work with Tim Sykes. Um, and I just loved Tim to death. And I looked through the list of people and I looked through the top traders in the Sykes family. And I was like, these are all short sellers.
yeah.
These are all like Jack and Kyle and all these people are short sellers. And I was like, well, I'm skeptical. I like sort of like finding the glitch. And these guys are really murdering it. These guys are killing it. And that was like that's when I really, that was it probably went through 8 years of back and forth and whatever else. And then I started shorting in 2021 and then a lot in 2022. And that's almost like 90% of what I do is short selling now.
Yeah, it's when I look at traders trading, are you short selling micro cap stocks or it's a mix of small cap and large like
I'll do both. I'm even starting to do large cap stocks after earnings, money losing large cap companies that report better than expected earnings and the stock pops. I will short that in after hours and hold till the next morning. But yeah, that's actually great for larger accounts because you can trade more size and it doesn't cost anything to borrow those overnight. But yes, I'll do a lot of micro caps too.
oh, and the interesting thing, it's like I think maybe it was like a secret in 2015 short selling these micro cap stocks. It was Tim who was
Yeah, yeah,
the father of short
yeah,
selling, the godfather
yeah.
of short selling back in the day. I remember. And then I think somewhere along the line, the secret got out. Too many people got short. Or market makers caught on, and we'll get the crazy squeezes. So it seems like long traders have a much lower winning percentage, but and it's harder. But to be a short, you need a lot of good discipline and risk management, which brings us on to your profit chart, which has zero crazy. When I look at your Kinfo profit chart, I know you're new to Kinfo. I think it's up 300,000 or something so far.
Yeah, yeah.
There's no crazy downturns. What do you attribute that to?
Thank you, by the way. So I'm very interested in this topic because I hadn't thought about it until you brought it up. And I guess I'll give you the short answer, but then I have a longer, scary story answer to that question that I want to tell a story about a giant mistake that I made. But I think number one, I don't care. Number one, I don't care. I don't think of this. I don't sell anything. I don't care about my reputation. I don't care about what people think of me. So first of all, I don't care. So I'm not trying to do anything in particular. Number two, I'm super overcapitalized. So I'm trading position sizes that can withstand enormous moves against me. Like I could I can stay solvent longer than a micro cap can stay irrational to quote can, like I can stay I can stay solvent forever. So now I don't really, and we'll get to this in a minute, but then the third one is I trade so small that generally speaking, nothing bad really ever happens to me. So I'll short, and stock selection is a big key, but I'm very strict on which ones I'll short, but I'll short something like say at $4 and it'll go to 12. And for some people from 4 to 12 is 3 margin calls. Like it would,
Yeah.
but to me, that would be a drawdown of maybe 7%.
Yeah.
I just don't even look at it. I trade in the morning. I don't look at it again. So it's this, I think that's what it is for me is I did take a lot of risk when I was growing $4,000 accounts into 30. I was just doing this over and over as practice. And I kept doing it over and over. And I was taking a lot of risk then because the accounts were smaller. But then, and so then if we could follow up on that, but 3 weeks ago, I was in Mexico for a group therapy men's retreat with Dr. Robert Glover, the author of No More Mr. Nice Guy. Love this guy. I've been a fan of his for a long time. He invited me to come down to Mexico. And I was reading this book about becoming a better man. And I was going to throw the book in the trash. I was angry and I was like, I don't want to take responsibility for my own mistakes. I'm like, I just was having this moment and I shorted MLGO and I hammered on it way early. 24 hours later on that Friday, I was down $100,000 in unrealized losses. And that's the worst. That's 10 times worse than the largest drawdown I'd had ever.
Wow.
And I was like, and I said, listen, I made this mistake. The old me would take the loss and then be down and out for a month or 2 months or just depressed and ashamed and whatever else. And I said, this doesn't happen very often. And I took a deep breath and I just faced it head on. Like I just went head on and it got worse before it got better. But I just closed that 3 days ago for $29,000 gain. It's the largest short selling gain I ever had. But I went through, that was the worst. That was so bad on my part. And it had nothing to do with stock selection and nothing to do with anything except for trade size.
Yeah.
You could almost short anything if you are overcapitalized. And that was such a mess up for me. But I had to like stare in the face of death and look at it. And for me, that's huge. I know Jack's I'm Tim Grattani, right? Some of the old stories of Tim Grattani being down $400,000, quitting for 6 months, or I think those stories, I owe a lot to Tim Grattani and the concept of the lost journal. Like I owe a lot to those people who you could see how stressful it was for them to go through those things. And I don't want to go through that. And it was horrible. Like those few days that I was in that trading down all that money, I was so embarrassed. I was so ashamed. That was rough. That was really rough.
But I mean, where did you learn to short sell? Was there something specific, or did you watch something, or were you tracking stats, or?
All right. Uh, okay. I would watch, this is like, all right. I have so much respect. I don't have any axe to grind with anybody. And so I want to be careful about how I phrase this because I don't think I'm I don't think I'm that great. And there's so many other traders on Kinfo that are murdering it. And I'm the least of all of them. But what I'm about to say is I don't want it to sound the way it sounds, but I watched as people were trying to learn how to buy microcaps and how frustrated and disappointed and how unsuccessful they were. That every day there's 9 microcaps that jump. And the next day, 8 out of those 9 are back to where they started. And I kept watching retail traders that smart people, good people that have small accounts, and they were taught like you can find the number one stock of the day and you can buy it, and then and I couldn't do it. And I couldn't meet anybody who is I'm not going to say that. It was hard for me to find somebody who primarily day traded and bought stocks who published their track record. But I found like Jack is I think Jack is like a true American hero in the world of trading. He's transparent. He tells you about his ups and downs. He's never shied away from showing you the worst thing he's ever done, but he's made a significant amount of money from shorting, and he does all kinds of stuff now. And I'm not going to call him a short seller, but Kyle and Jack and Tim Grattani and those folks, it was more the concept than anything else. The concept was like, I can't figure out how they're doing this, but I do know that in the universe of day traders that publish their results, the short sellers are murdering it.
Yeah.
And so I just spent a huge amount of time sort of reverse engineering. What do, and this is where I want to be careful. Like, what do people who teach people to buy stocks teach? What are they teaching you to look for? And clearly a lot of times it doesn't work. Like a lot of times it jumps up for 5 minutes and then it spends the rest of the day dropping and everybody's holding a bag. And so I said, well, what are the characteristics of those companies? What's the difference between the one company that keeps going up and the 7 or 8 or 9 every day that fall and are lower than? What are the characteristics? What are the differences between those companies? And I just started taking notes. And when we share my screen later, I've logged almost every single short sell I've ever taken. I've saved a chart and an analysis, and I saved everything. I documented the chart and marked it up for, it's over 2,000 trades probably now. And I learned a lot from, and I still do it now. If I won't document the trade, I won't take it. I have to stop and chart it up and stuff.
That's going to be interesting to see. But just kind of one final question that I'm just thinking before we ask a few questions about Kinfo, then we'll get into your charts. And you're 20 years in the business. For someone who doesn't have so much capital, for someone who is in a smaller account, but they still want to short sell, so that's the edge. Do you have any kind of tips or advice for someone who can't hold? Is it a case of trade smaller, trade really small, or what?
I love this question because so 2023, all I did was start with 4. I don't know why 4,800. It was a weird, but I would start with 4,000 or 4,800, and then I would run the account up, and I did that 7 times. So over and over and over and over and over again, I just kept doing that. And then in February of last year, 2024, I did a thing. I said, you can come for free to my office. I don't have an office, but I rented a conference room. I said, you can come for free if you want to come talk about shorting, because I did this all last year, and I finally and I shared it, and everybody started with a small account in February, and all of us traded the same things in the same way as a really small, there were like 17 people in the group. Jake Hartman, who I think he may start posting there, and a bunch of others. And here's what we decided. If you have a smaller account and you want to short or long, like it doesn't matter which it is, because it's not really that different. You have to understand that as a percentage of your account, you are going to experience percentage drawdowns that are higher than when you have a $30,000 account or 100. You're just going to have to accept that it's scarier to trade a small account because you can't get anywhere otherwise. And also, if you short 10 shares, your overnight borrowing costs and your stock borrowing costs outstrip all of your profits. You have to trade at least 100 shares. And if you have a small account, 100 shares you could be down $500 overnight. And you have to hold them overnight because your account's small and you're pattern day trader. It's like there's all these problems with it. And what that did for us was we zeroed in on stock selection. So if you're going to trade stocks, buying or selling and day trading, and you have a pattern day trader account in the US, you have to figure out what are the criteria for stock selection. For a buyer, for example, no threat of dilution, has 40 or more months of cash left as a company. You have to learn how to analyze this stuff. And has a high percentage of institutional investors. You could find all this on Yahoo and stuff. Those stocks are the ones that tend to run. And so if I were going to buy stocks, I would only trade those ones, and I would hold them overnight in every situation so I could take as many trades as I wanted every week. And if I were shorting, it would be the reverse of that. And I would have to hold them overnight, and I would have to be great at stock selection, and I would have to have a high win percentage, because when things go wrong, you don't want to give back like 4 weeks of profit just on one bad trade. And that is the struggle, but you get really, really good if you force yourself to trade a small account, hold everything overnight, and concentrate on stock selection, and you stop taking crappy, stocks, and you stop all of that other madness, and you just focus on what are the characteristics of the stocks that will run. And it's not technicals. It's something fundamental about how much cash that company has left. or they have FDA approval to market something for the first time. Plus they have 40 months of cash left. Plus they have a high number percentage of institutional investors. Those companies will run. Every other one of them will not run for the rest of the day. They will not go anywhere. And the converse is true. So yeah, I think having a small account, if you're open to taking the risk and you're willing to hold overnight and you're willing to document every single trade you take, and you publish your results. You transparently publish everything that you do, so there's no secret trade, and you can't take one on the side and lose a but like you have to be willing to like open yourself up to criticism and face the music, because most of us hide our losses and we're ashamed of it. Like you have to be willing to open up about that stuff. And there's so much that comes from that. But those are all things that are very difficult to do. So
Yeah, so quality over quantity and transparency.
yes, yeah.
And on the subject of transparency, you're a transparent trader. I think is it from February last year? Is it about one year you've been transparent now, is it?
I
With
think
Kinfo?
I think it's either January of last year or December of 2023, somewhere in there, somewhere around there. Yeah, probably February or so. Yeah.
So the big question is why now?
It's funny you say this. So I don't sell anything anymore. I sold a lot of stuff. I worked with Agora. I worked with Tim Sykes. I loved him. I've worked with a bunch of people. But last year, um, like when someone sells stuff in the world of trading, God bless all of, and I did it. Everybody does it. Um, I wasn't always transparent, and I honestly thought like if I'm transparent and I show my mistakes, people will be less likely to buy from me or whatever.
There.
And last year in February, when I just sort of let it all like go, and I don't want to sell anything anymore, and I don't want to do that anymore. It's weird that at the point where I didn't have anything to sell anybody anymore, I thought I should have been doing this all along. I should have been showing this all along. Um, because I learned so much from I still do it. I go to Kinfo and I look at what the top people on the leaderboard are trading, and I look at what they did and how long they held the position and how many shares they traded. And I look at their entry, and then I go to a chart and I say, wow, they traded 40,000 shares and it went $2 more against them or whatever. And I learned so much from that. And I thought, well, everything that I do now is free. I'm going to open up my trading results and my trade journal and I'm just going to open it up. And I'm embarrassed that I didn't do it earlier. Tim Sykes
Yeah.
was big on that. I heard Tim talk about it for a long, long time, and I never took him. I'm embarrassed I didn't do that sooner. He led the way on transparency for a long time. But
Yeah, because I know he's ran profitably for many years now, 10, probably 20
yeah,
years now. But I mean, in terms of so for example, if someone is teaching trading, would you say it's almost an obligation that you should, because like 15 years ago, 10 years ago, fair enough. I think you shouldn't. There's no real way of showing your results. The tech
yeah.
wasn't quite there except profitably. You can show broker statements, but it's just a PDF kind of thing.
Yeah.
Do you think it should be an obligation now? If you're teaching, you should verify your results in some real way. Or do you think,
I think yeah. For me, yes. For me, there's no question. For me, no question. Like there's people who teach, and what do they say? People who can't do it teach it, and I can't speak for other people, and it's none of my business what other people do. But for me, when I started publishing the results, I realized that I had had an obligation that I didn't. I would do webinars, and you could see my account all the time, and I would send out my brokerage statements. But for me, I realized that it was an obligation for me, and it's none of my business what other people do. But that's why I want to be careful about it, because I could very easily say something like, if you're not actually trading, you have no business teaching people how to do it. But I don't know if that's true. I don't know if that's true. And that's just very convenient for me to say now that I actually do publish the results. So yeah, I think it's like well, let's do this. If I were going to hire somebody to teach me how to dress better and they looked like a slob, I wouldn't do it. If I were going to hire somebody to teach me how to do real estate, but they had no verifiable proof that they'd ever done any real estate investing, there's no way. If I was going to hire somebody to do my taxes, but there was no evidence that they'd ever even done their own taxes. So for me, I was like, wait a minute. So if I ever do teach anything again or charge for anything again, which I never want to, but I think it's an obligation for me for sure.
That's a pretty powerful statement coming from someone with 20 plus years in the business as well. And the classic example is getting a personal trainer who's out of shape.
Yeah, right. And it's already, if you're selling stuff in the world of trading, you already have the defense mechanisms are up. The people that you're talking to are automatically suspicious. If you can do it, why are you teaching it? If you can do it so well, why are you charging for it? Listen, I don't have any problem people charging for their time. This is America. Like America won. Capitalism won. So I don't have any axe to grind with people who sell stuff. But I think it's fair for someone watching a webinar. Well, someone's going, this is the greatest thing that ever happened. And it's the secret to selling options on AI. Like it's fair for a person watching that webinar to say, show it, show me what you've, that's fair. That's fair to say. And I don't know if the industry has an obligation to do that because it's a free country, but certainly, yeah, certainly it's hard to imagine like if they can't do it, why are they talking about it? Like, why, if you can't, like, that would be, but I didn't do it. Like, Steven, I showed stuff. I was more transparent than I'm saying, but I want to just knock myself down a peg. Like, for a long time, I would show my account and show my statements, but I didn't have them verified. And I think if you're not verifying your trades and you should. I think it's just better. You're a better trader if you're just better at it if you are public about it.
No, absolutely. And I think, well, there's two sides to this coin. Well, we can't force every mentor to verify. We can encourage the public to demand verification. And I
Yeah.
suppose that's the other side of the coin. And look, for a mentor, you could say, look, I don't want the pressure of trading live every day. And that Kinfo would say, well, did you know that you could just upload 2020? Did you know that you could just upload that year? Did you know you could just upload 2024 when it was done? Just show me 1 year. Show me one.
Yeah, right.
Show me 1 year of 500,000, and that's okay.
Tim Grattani actually, I bought a course of Tim Grattani's, seems like a long time ago. And it almost seemed like the whole course was, here are some stories about these horrendous losses I had.
Yeah.
And I found that to be so instructive and so helpful. And if I were going to do maybe I will do a public webinar and I'll talk about my big unrealized loss in MLGO and where I got in wrong and how I made it worse for myself and what I would do the next time and how I dealt with the pressure of seeing a giant loss as it was going and didn't lose my shit and still faced it. Like that to me is more helpful than hearing someone go, well, you get in when the squiggly line crosses the other squiggly line, and then it goes down to this squiggly line. That doesn't help anybody. It's what do I do when things go wrong? Because if any of us could take back our worst 5 trades, we'd have so much more money. So the real question isn't, can we make money trading? It's, can we keep ourselves from giving it back? That's all you have to spend time on. That's the only thing you need to spend time on is learning how to not give it all back.
It's 100% correct. And look, when you are short selling and your win rate is as high as 82% or 83%, or 9 out of 10 stocks fail on the day, it's not a case of how difficult it is to trade. It's a case of what do you do when that one goes against you? How do you handle it? And that's the $1,000,000 question. And that's why a lot of traders can make money, but they can't make money long term. Because what do you do when you win, and then you don't know what to do when that one goes against you?
And it always will. There will no, you cannot prevent a bad experience from happening, whether it's a mental error, emotional trading, a trade size error, a mistake on your technicals, or you fat finger it. We are going to have, all I did was whiteboard on Sunday morning. With my best friend, we whiteboarded and I was like, I want to make a little bit more money every day. Cause I was doing sometimes 2,000, sometimes 1,000, sometimes 4, but I wanted to do more. And I said, I can't figure out a way to talk about increasing my profits without setting trading goals that are going to get me in trouble. And he said, well, why don't we do this? Why don't we run through a bunch of scenarios where your loss is huge? why don't we run through a scenario where you're down $140,000 on a trade? And I'm like, why are we doing this? He goes, because if you increase your trade size, the profits will take care of themselves. You just take profit at the same areas you always do, and it's really not that big of a deal. It's the loss that's where everything's going to get messed up. And so we spent this time, and he said, all right, you're down 140,000, and the next higher level on your short is $3 away, and that would be a $200,000 loss. What are you going to do? And we went through this scenario where I said, oh, okay, I'm going to throw off some of the position size. I'm going to dump it, and then I'm going to put it back on later at a higher level. And we went through these scenarios, and I'm like, okay, and then I'm going to call, and I have this whole thing now because if I increase my trade size, the money will take care of itself. It's the days where it goes wrong that I have to be ready to see larger numbers than I've ever seen before. And you're going to see them no matter how hard you try. Jack Kellogg's a perfect example. He's so transparent. I love that guy because he'll take a giant, giant loss and he'll admit it and he'll get upset and he'll talk about it. But everybody just focuses on his wins. And God bless him. He made $1 million last month trading whatever it was. God, the guy's he's such a baller. But to me, it's not because he made $1 million in a month. It's because he showed the losses. That he makes that money because he's learned how to not be his own worst enemy. He got out of his own way. And I think he did it by being transparent, Stephen. Like, that's the thing. He doesn't hide what he does. And that's just like, that's the gift that never stops giving.
Yeah, that's an interesting observation. Jack's a bit of he's certainly an American prodigy. But I was going to ask you who your favorite trader is on Kinfo. I heard you look up to on the leaderboard, but I'm not sure if it's already answered.
Yeah, I like Kyle Williams. I like looking at and some of these guys, some of these people have these weird names. And then I look at their trades and it's all these options trades. And I'm like, is this the Matrix? Like, what am I looking at? I don't even know what those are doing. So I like those ones. I'm on the hunt for traders who are day trading, buying stocks and holding those stocks for less than 24 hours. I'm very intrigued by what they're doing. So I spend maybe 30 minutes a day on Kinfo and I go through the people on the leaderboard and looking for people that bought stocks. And then I go to the chart and I see where they bought, what was the max excursion, how far did it go against them, how many shares were they trading, and what does it appear they were doing when they entered? What time of day was it? And then I'll go to the company, and then I built some things with AI where I upload their earnings releases and their 10Ks and their 10Qs, whatever, depending on what they have. And it will start analyzing it. And I'll start analyzing, like, what are the characteristics of these companies? So I have this database of people who took day trades and bought stocks. Here are all the symbols. And then I put all of the collected research into the AI and I say, what are the common characteristics? And it's 40 months or more of cash left on the runway, more than 20% institutional ownership, a market cap over 100 million. Like, these are all just it's not like speculation. This is all of them share at least those things. And I'm like, oh, so if a stock pops in the morning and it has those characteristics, I might start buying stocks, Stephen. I might do something that I don't usually do.
That's very interesting, and thank you for sharing that. Do you want to go into some charts to wrap up?
Yeah, sure. It'll take me a second here to just get this all. This is my trade journal. And I mean, if we want to, we could, I don't know how many slides there are in this Google slide deck. Let's see. 798. So there's 798 short selling trades that go way back. I documented almost every single trade I took for a long, long time. And you could start to see characteristics. They start looking exactly the same. Like, they look like this over and over and over and over again. And today I shorted, and we can go to the chart. I'll answer whatever questions. I shorted VINC when it was like right up there. I actually ended up buying 10,000 shares and I shorted it. It jumped up and hit the current monthly pivot up here, dropped back, fell below the volume weighted average price on a 1-minute chart, and I shorted it. And I know that it has an institutional ownership of 10%, so that's lower than the threshold. It is a market cap under 100 million. You and I, Stephen, could buy this company for 2.4 million. I don't think we should, but you and I could go buy
Lose some
this
money
company.
quickly.
So, and I'll track the long-term chart and I like to look at one of the questions I like to ask is, does this stock tend to drop every single time it spikes?
Mm.
And I love to see that. I love to see and I never hold long enough. So today I shorted 5,000, shorted 3,000 more, and then I didn't even hold it for this move all the way down here. But they, that's what you can ask me anything you want. I don't want to interrupt you. But
No, it's fine. It's fantastic to see. Do you have a general? So you've already kind of outlined your fundamental criteria of what would be a long, and obviously the opposite would be a short. But
yeah.
in terms of your execution, are you looking for anything more than pivot points or a certain percentage up before you start shorting, or is it just against resistance? Or
I love to see a few things in particular. It's you don't really see it here on the chart, but this purple line here, this is the current monthly pivot. And I'm going to try to, I'm such a long-winded blowhard, but I'll try to make this quick. In 2009, 2008, 2009, a woman calls me on my cell phone and says, "Hi, my name is whatever. My husband, Gary Fluker, works for Julius Baer on Wall Street, and his birthday's coming up, and he listens to your podcast. And I want to give him the gift of sending him to your office for a few days to trade with you as a birthday present." I was like, "Well, that's nice of you to, offer me as a birthday present, whatever." So Gary comes out and he pulls up his Bloomberg on his laptop. So we log into Bloomberg and we download hundreds and hundreds and hundreds of thousands of days of data. And we spent 4 days asking the question, how likely is it that a stock will touch its monthly pivot point in the month that pivot point is created?
Mm.
And the numbers were 85% or higher. And that spun off a ton of research. So what I like to do to answer your question is I like to see on a short, a stock jump up to and hit the underside of a current monthly pivot
Mm.
and let go down. Stocks in a long-term downtrend will typically rise up to their pivot and then bounce off of it and fall. Stocks in uptrends will tend to go above their current monthly pivot, bounce off of it, and continue up. So I'd like to see it either bounce off of the underside of the current monthly pivot, or I like to see it above that level, and I like to use that current monthly pivot as a target. It's just a magnet for price. And the first time I ever started pulling this stuff up, I was like shocked at how reliable pivots were. This is VUZI. I don't even remember why this is here, but it jumped up to the underside of a pivot on this longer term chart, and then it's falling all the way back down. It will eventually fall all the way down to like this pivot right here. It will go there. So if it has an up day, for example, it might jump up to the underside of this pivot. I'll short it and I'll try to ride it all the way down to that level that we talked about over there. So that's another thing that I'm doing. And you can see here, companies that lose money will jump up to the underside, drop down. They will jump up and drop down. And it's very consistent. It's very reliable. They've got to meet the fundamental characteristics first. They've got to be a terrible company that's blah, blah, blah. But as long as those criteria are satisfied, it's pretty reliable.
No, it's interesting to see that you're trading pivots, because I think I was probably learning to trade for a few years before I heard anyone talk about a pivot. But it's the guys who've been trading the longest time generally use them, and that must be a sign.
Yeah. There was a guy that came out to my office. He retired from the floor in Chicago, and he brought his jacket so I could see his Refco jacket. And he reached in the pocket of his trader coat and he pulled out this note card, and it had the daily, weekly, and monthly pivots on them. And I was like, "Why is that there?" And he goes, "That's all we did. We would trade price. We would trade it as price moved away from those pivots, and then we'd trade back to them. And as a market maker, that pivot was like fair value for them during the day."
Wow.
And it stuck in my mind. That stuck in my mind. And he said when he got off the floor, he wanted to learn how to trade with pivots. And I was like, honestly, that was back. I didn't even know a pivot from a hole in the ground. But now it's like a major, major element of what I do for sure. Like when VINC, the last time I shorted it, when it jumped up here, you know what it was doing? It was just reaching up for an old monthly pivot that had not yet been hit. That's all it
Beautiful.
wanted to do. It's all it needed to do. So sometimes we ask as short sellers, when is the move going to be over? When will this pain be over? That helps me answer that question.
How much does the sector or news influence what you're shorting?
I am I don't care about the news at all.
No.
I just don't care about the news. There's one exception to that happened over the last 2 months was at the beginning of every year I write down on a piece of paper what I think like the theme of the year is going to be. And this year was Chinese stocks recovering and robotics. And there was a show in Las Vegas at CES or whatever about robotics and AI. And that week, these money losing microcap robotics companies were just flying high. And we stayed away from shorting those stocks that week. So if there's a major theme going on, you'll see like for a while there, last fall, all the companies were like, microcaps were like, we're going to announce a coin. We've created a meme coin, or
Yeah.
we're going to stop making disposable diapers. We're now going to mine for Bitcoin. All these, and we wouldn't short those ones because that was the hot topic of the day. And the nice thing right now is there is no hot topic. Everybody's bearish, which is bad because nothing's going up. But so there isn't one of those right now. But occasionally there's a topic that hits. When COVID came around, you wouldn't want to short a company that was working on a vaccine. We're going to have a time sometime this year where companies working on bird flu vaccines, microcaps, and even microcaps that have a headquarters at a UPS store that don't make any money, they're going to announce that they're working on a bird flu cure. I won't short those ones. So that will become a theme, and I won't get in the way of the mass. Like when the popular madness and delusions of crowds takes over, I will get out of the way of those kinds of news events. But otherwise, I don't care about the news.
And for people who haven't traded long, though, they might not know, but there's been coins, and then before that, vaccines, and before that, EVs with the Tesla run up and the other electric run ups, and then marijuana, and then defense. Whenever there was a Las Vegas shooting, that you'd have or police cameras. There's been all sorts of things over the years,
Yeah,
and
yeah,
there your avoids. Do you have a sense of like the daily patterns? Are you looking for the first red days, the gap and grab
no,
spikers, or just
nope. I, I'm embarrassed. I still don't know what a first red day is. Like, I'm not. I don't know what that is. So I've heard of
you're
it.
doing well though? You're up 300 grand. You're up 300 grand since you've opened Kinfo, and obviously you've made a lot more in the past beyond that. But you're up 300,000 short, and it's just from studying the Kinfo charts, looking through the data, analyzing what's going on based statistically,
Yeah,
and running the probabilities basically.
yeah. What was the other one you said? The first red day, and then the other one was
The gap and prob.
So I would say that that sounds like that sounds similar to what I'm looking for. I'm looking for money losing companies to jump 30% or more in the pre-market session. So that's probably more similar to what I look for. But yeah.
And you're looking at them to come around the pivot points.
Yeah, I'm looking for them to come around the pivot points. I'm looking for signs of exhaustion. I'm looking for one of the things that I like have written everywhere is just wait, 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 comma, wait, comma, wait, comma, period. Like wait, 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 wait. Like don't rush in to any trade ever. Just wait. And I might miss it, but just wait. Just hold off. And that has been wonderful. That's been great.
Yeah, I think there's with short selling, I've done it for a number of years as well, and I think there's only two real ways to go wrong. And the first one is getting in early, and the second one's getting in too big. And I suppose the third one is not knowing when to take the loss. So I think there's only there's only three ways you can go wrong with an 80% win rate. So there's only three, but
Yeah,
people do it a lot.
and I would add the fourth one for me is, and I love those that you said. The fourth one for me is stock selection.
Yeah, of course, yeah.
Trade companies, trade companies that don't have enough cash to survive the next 12 months. What you can look for is in their 10 Qs, or 10Ks, depending on whether it's a foreign company. You can look for they have to give a notice, and I'm nervous to talk to you, so I forget that. But they give a notice that they have to put it in their quarterly filings that they might not have enough money to survive the next 12 months, and it's a
Yeah.
mandatory notice. Yeah,
That's a big one to look out for as well.
yeah.
We're coming up towards an hour. Do you have any final tips, any golden nuggets, any stories, any memorable stories in the industry from the last 20 years of trading to close out on? You can stop sharing if you want.
Okay. I guess I would just say, I just have so much respect for what you're doing, and I have so much respect for the traders on the leaderboard. Um, like I'm not in the same league as any of those, but it is amazing in this day and age that any retail trader can go to the website and they can start the process of reverse engineering what someone successful is doing. And I would focus most on the losses. Look at mine, look at any, focus your attention on the losses and look at what they did. And in every case, you'll see if they're buying stocks, you're going to see that they got in too late at the top of the move. If they're shorting stocks, they got in too early at the bottom. That it's so much to learn from that. And some of these people on Kinfo, I'm just like, they are crushing it. They are making so much money, and it's out there for us to look at. It's amazing.
Well, and thank you so much for your time, Rob. Really appreciate it. Really appreciate you coming on and for everything that you've shared in the community. Thank you.
Thank you. I appreciate it.